Hello and welcome to the analysis of a DXY dollar index. My name is Rick. Thanks for joining me here. The last we spoke about dollar was around here when the market was falling down, and this is what I mentioned in my previous analysis that market could be heading towards one of these levels, a structure zone or one of these levels, and we were looking for a bounce up because you see. The reason behind this was this has been a really great run for dollar. There have been few parabolic moves. If you have been following my analysis, you know what I'm talking about. Now, after that, the market decided to take a shallow correction. Why? Because the market is already very bullish and it can still continue to rise further. But when the market completed a W pattern here, it was supposed to fall. It did fall, and it reached a previous structure level, and that is why we were expecting market to continue to rise higher. And this is where a lot of people actually got wrong, like they have been looking at court reports and other data, but you see those court reports and data can also be manipulated because they are delayed, so the orders can be put in and taken out, so those sort of things can be manipulated. But what you can do is just focus on the chart, because charts never lie. When you look at the chart, when you look at a candle, when you look at a price action, that has already happened, right? So if you know how to read the chart, you will have better understanding of what are the possibilities, what are the scenarios that can happen. So the market started to go higher and it can continue to rise higher. However, there are few scenarios which we should discuss first. So the first thing is that the market is creating this V sort of structure. In our FCP methodology, we rely on this fact that there is nothing called a V structure. There is always a W, there is always a M pattern. So what you should do is go down to the lower time frame and you will be able to spot a W pattern in the middle of it, and this is what it is. So right now it is completing a W pattern here, which means that market can actually fall down. What you will also notice that this has come to a previous structure level. So the way it works is the market has gone up, fell back down, went up, broken the structure to the bottom. Now it is coming back to retest the previous structure, and it can fall back down once again. So this is still a possibility that the dollar can fall down. If dollar continues to go higher from this level or breaks the previous structure, then the next level, natural level, is going to be okay. Obviously, the first one is going to be the previous structure, which is going to be 104.625. If that is also broken, then the next one is going to be 105.477. Why? Because in that case, it would form an extended W pattern. Okay, so these are the scenarios here. Now, if the market continues to go higher beyond this, okay, if it continues to rise higher, we already have mapped that in our previous analysis. So if it continues to go higher beyond 105, okay, this can go easily towards 110, area, right? That is still a possibility. But what we can do is just monitor this area first, because there is still a chance that market can go a little bit higher and create a divergence and then fall back down. So there are more chances of actually falling down. So, and there are few reasons here and few levels here: 104.189, 104.204, 104.627, 105.477. These are all the levels from where it can start to fall. If you're looking for a long condition, then you should be a long trade, then you should be careful, because we are in a previous structure area, and we have completed a W pattern as well, so the market can fall down. You should be aware of that. On smaller time frames, obviously, there can be opportunities on both long and short size, depending on how you want to play. So those are the bullish scenarios here. What if it starts to fall down? If it starts to fall down, then obviously it is going to come down to the previous structure here, somewhere around in the mid level here, and that will be approximately here. Let me put a line so that approximately 102.727. That will be a short-term target. And if it continues to fall, then this zone, which is around 102.426 and 102, that will act as support. And if you're looking for a short, that will also mean that it will act as your profit target. What do you mean by that? If you take a short based on whatever strategy you are following, right, where is going to be profit target? Your profit is going to be this support, or this support, or if it continues to fall, this support, this support. So all these levels which used to act as resistance, now they will act as support if the market starts to fall. Hence they will act as your profit targets for short positions as well, right? Let's look at the higher time frame structure, which I have already published, which I published on May 12th. And this is how it is looking. So dollar can still rise, right? We are looking at monthly time frame here. The dollar can still rise. It has actually broken through this channel, right? This is multi-year channel. It has broken through that channel. And right now we are just struggling with the previous structure here. And that is why it can fall down a little bit. It did for a week or so, and then it is now coming back up. If it finds a confirmation above, if it breaks strongly above this channel, then it can continue to go to 110 fcp zone. If it continues to rise beyond that, then the next target is going to be 113.482. If it continues to rise beyond that, then it can reach 127.417 as well. So target 1 has already been completed. Sorry, here the channel has been completed, which was our target 1 for long from here. Now on this chart, I'm showing that this target 1, after a breakout, this next target is going to be 110. 113.482 is going to be second target, and 127.417 is going to be third target. So this is already there. You can follow me on TradingView, and this is already there, which you can look at yourself and use it for your reference in future as well. Okay. At the same time, why don't we just look at Euro USD? Because Euro USD is the biggest component in DXY. So let's have a look at that as well. It gives us a better idea on where the dollar is probably going to go. But before we come to this chart, let's look at the higher time frame, um, which I published on March 17th. And this has actually worked out really nicely. So this is what I said. I said if 1.1173 becomes a resistance, then most probably the intermediate target is going to be 1.04162, but the real target can be 1.01694. Okay, and this was published on March 17th, and since then this has happened. The market has fallen. It went higher into the same level, into that structure level 1.11730, got rejected from there and fell to our target right into 1.04162. Okay, and now it has, then after that it went higher to test the previous structure here, and it is falling down, which means that it can still continue to fall to our real target around 1.01694 if it breaks through the previous low here. Okay, which is 1.4162 level, right? It can, if it breaks through that previous low, then obviously it can come down to 1.01694. However, the market can still form a double bottom or divergence based double bottom. So what I mean by that is, so euro fell, okay, then went up, now it is right here. Okay, what if it comes to the same level, or even if it continues to fall a little bit and then goes back up, creating a w sort of pattern, and in that case it can form a divergence or a double top, a double bottom here. So beware of that. It must cleanly break through the previous level and give you a confirmation before it starts to fall towards the next lower target. Okay, so this is the higher time frame level here, higher time frame scenario. Let's look at the other chart that we have. On this other chart on the weekly time frame, this is what we had. This was again published a long time ago. The market fell through this fcp zone. I'm talking about this zone here. Okay, there were few levels here which were hit. It reached right into this fcp zone, which was given in public domain. You will find this in the previous analysis, or in our telegram group as well. The market went higher to test the previous structure level, and now it is falling down. Okay, so if it breaks through this fcp zone cleanly and gives you confirmation, then only look for further short opportunities for a long term. Okay, so that's what we have here. On the smaller time frame, if I go to the 4-hour time frame, pretty much like how we have on dollar index, we have an M pattern forming, which means that at some point in time it can start to rise up, and you should monitor this particular level here because this is the previous structure level, so that can also act as support. So beware of that, if the euro starts to go up, or other way around, you can say if the dollar starts to go down, then it can rise up because we have an M pattern and we are still in a structure level. So this is what we have on dollar index and euro USD. Hope you enjoyed this analysis, found this useful. If you did, make sure you hit the like button, subscribe to the channel, and share it with other traders and trading communities, because that's how we help out each other. And I'll see you in the next one. Have a great trading week.